My girlfriend don't like my ugly pictures.
What?
Cause I'm tall. That's why they don't like me.
They be hating?
Yeah, they be hating with my money do rag on. I'm funny. They be hating, man. Crazy.
Yo. Wednesday, March 8th, 2023. We're already started here. It's actually almost power hour on Beige Book Day. I've actually got some longs already, just like trailers now. So if you hear noises, it's just the target's getting hit, which would be great, or the trailed stop's getting hit, could be that as well. So if you want to get a hold of me at Red Ben Trader on Twitter, and then if you want to learn more about the algo, you can email my coach Simon. His email is on the screen there, trade, letter N, wordperform at gmail.com. You can ask him for a 5-day free pass to the room. It is a paid futures trading room, but I don't know if they're open for new members yet. We had like a couple new ones last month, and Simon likes to take his time with each individual person, make sure everyone's on the same page before you add anybody new. So, but if you are like a serious futures trader who wants to get more consistent, and you want to try a more systematic approach using the algo, consider it. It's been really helpful for me, but obviously it's not for everybody. So give me an email if you want to learn more about it. So here's what we're looking for. This is NQ. On the left, you've got the 24 tick. This has got all my signals on it. So it's busy, but I'm sharing like the full view today rather than, because if we were on some of my streams or videos, I'm like digging into individual setups, and so I will hide a lot of the other indicators that are relevant to that setup. But here I've got them all showing so that if I notice any combination that's tradable, I can take it. But realize that I don't need to know. I don't need to like interpret what it's saying every step of the way. I'm just looking for the pattern. So I know, for instance, in this scenario, and remember, all of this is conditional. So due to the fact, let me just double check this is true, pretty sure. Yeah, due to the fact that we had, let me just check here. When did I have confirmation? I'll show you exactly how I know. Okay, so beginning, I'm looking at another screen. Beginning here on the green. Okay, where does that show up on this screen? Let me hide the other drawings. Hold on. Oh wait, then you won't see it. Okay, but there's a green like vertical line. Oh, I see what I'm doing wrong. On one of these highs. Where the heck is it? Was it really that long ago? No, I went too far. Where did I put it? Wow, it jumped. Okay, hold on. Let me go back to the end again. Oh, are we giving this up? That would suck. Do I want to hold on? I've got longs. That'd be frustrating to let go of the runners and then have it go while I'm explaining something, but I'd also hate to. I guess I could trail my stop a little more, but I'm long from way down here, so it's. I mean, it is just a trailer. I've already hit most of my targets, but I like to leave one for POC. Yesterday's POC up here is where I'd like to get filled. There's a voodoo range level at 39.50, so I mean that would be freaking sweet. I'm long from average open fill price 12,155. So this this X here was the trigger, and I got long on the pullback into here, and I already took a bunch of profits. But I've got the trailer left on 2 of the accounts, and with the PA accounts, I don't really want to leave it to chance. I want to be able to monitor it, but like I said, I'd also like to be able to explain some things. But that's why I have the afternoon too. So if we don't get a chance to go back, I can demonstrate what I was going to show you before. But for now, I guess we'll just kind of watch and see what happens. It's there's only like not even 90 minutes left in the day, so let's see if they can hold this. This little dot here, getting behind that would potentially cause a problem if that bar is not purple. If it's purple, it could still fall. It's just they have a chance to save it, but I'm tempted to just take profits here, which probably means it's the wrong thing to do. If it's more comfortable to take profits, it's usually better expected value to hold. But at least for me, that's the case. So it looks like they're going to put in a purple bar here. They're going to get behind this one, though. Oh, because this on the right, this is the 15 tick, so this is significantly smaller. You don't really want to make all your decisions off the 15 tick, but when things are going slow, you can. If it goes too fast, you've got to only use the 24. What you really want is when you want them to be aligned so that this one is setting up bullish and then the 15 tick triggers bullish. That's your best case scenario, or vice versa, obviously. Well, they just can't close this bar. I mean, if they don't close the bar, then there's nothing to worry about. But if they close it and it's not purple, if they close it bearish and it's not purple, then they're probably going to come down to this dot, and I don't really want to give away 20 points, even though honestly I might still be looking at another 40 to 50 points. I honestly think. I don't know if it goes straight there, though, right? Like, it could need some rest. It could need to pull back and trap underneath, like, an apex. Like, it doesn't have to go straight there. And there's no way to know if it's just going to rip or if it's going to sit here and then continue. Or are they going to get trapped and it reverses? We don't actually know, right? It's all probabilities. So while I can say that I think it's bullish, and I have a target up here, and I'd like to get there. I have no idea how many setups it will require, or how many rotations it will require to actually get there. And along the way, we might have an opportunity to like add to the trade or to pull off the trailers and then re-enter. That's just the way scalping goes. Like, you have to be open to the fact that like you might have the direction correct, and you might even have the target correct, but if you can't manage risk and get a good risk reward, you can't take the trade. And so a lot of these setups, like with the patterns, the algo patterns, they're not necessarily they're not signals that like we're going to go to high a day or that you're going to hit some target far away. It's more just a sign that at this very moment buyers have control of the market, and that might be very brief. So for instance, if we were trending lower and then I got a signal that told me that buyers maybe are trying to trap a seller, that might be worth a scalp, but because the trend would be bearish, I would not plan on holding runners on that trade unless I had some like higher time frame reason than that to think that that it potentially like breaks out or something. But it the important thing to realize is that as a scalper, since I'm so zoomed in looking for opportunities where I'm not risking more than 20 points on NQ to make like 10 to 100 points per trade, that like preferably getting a risk reward ratio of 1 to 1 on most trades, but willing to take some profits early, and occasionally take the very small scalps that only get paid 10 when they work, but they work maybe 60%, 70% of the time. If that's your focus, which is what I do every day, then it doesn't make a lot of sense to spend a whole lot of time trying to estimate where the market's actually going. Because it doesn't really matter. Like, you could tell me that the market's going to close green today, and it doesn't necessarily mean that I can trade it with managed risk. You could know it's going to close even at a certain price, and you might get greedy and not realize just how far it goes down first, right? Like, just because it hits that price doesn't mean it's not going down, because maybe it comes back up. I mean, your only real trade, if you knew where it closed, would be like in the last 10 minutes. If you were within like 20 points of that number, maybe you'd give it a shot. But other than that, you've got the entire day where you have no idea what the range is going to be. You don't know what the price action is going to look like. You don't know if you're going to get wide rotations or tight rotations. There's so much more to this game than is it going up or is it going down. Okay, so they got underneath it with a real bar. So I'm going to go ahead and cut the runners. It's not bearish, and I'm not saying that we should stop looking for longs. The longs could still trigger, but there's a good chance that this apex gets taken out now down here. There's like a flag behind that dot. I used to have the dots transparent, but I'm using them so much that I decided I was missing them. They're a newer signal, so until I get used to how to use them, I have them really big. I know exactly where the triangles are, or the what's it called? Not the triangles, the flags, the apexes. I know where those are anyway. Like, it's the swing high and low, so I can see it. But a lot of times, if all these signals are new to you, it's way too much information to interpret. You just have to accept that you don't know what they all mean and just wait for the certain pattern. So I'd like to see. Okay, here, I can tell you where we would know it was bearish, right? If you want to know, how do I know if this is okay to short? So my first opportunity to short would be, see this X here? If we close a bar, any bar that's bearish, underneath this white line, the potential for shorts opens up again. But because of the fact that we've had what we call a dominant wave up, I'm not going to go into exactly how to figure that out, because you can learn it if you're in the room. But that's not my own creation. That's something that Simon taught me, and I'm not going to just give away stuff that my coach is teaching, since he charges for his time, obviously. So once it's a dominant wave, which it is, this is a dominant up wave here. This one here that goes from the low up to here is where the first dominant wave, and then this is our second dominant wave. So having two dominant waves doesn't to the upside generally you're not going to immediately go and take out this low. Typically what you're going to do is consolidate and then go higher. That's usually what's going on. But on a higher time frame, like if I pull up like an 80 tick, right, and you can see that we're actually in like a consolidation zone. So just because it's dominant on the tiny little 24 tick here doesn't mean we're going to break this high, right? Because this consolidation, we might just stay in here, right? We don't have to go lower than this. We don't necessarily have to go higher than this. And if you draw the volume profile of the consolidation, and you kind of look at like where all the volume is, you can see there's like I don't have the volume high and volume area low marked, but I can see it. It's like it's this, right? That's the volume area basically, and so that's where I expect resistance to be. And if we can get out of that area like this, and then it can hold on a pullback, we can definitely go higher. Like, I don't care what the economics say. Like, econ can be horrible, and we can still trap shorts and go higher. So don't let that. If you're trading futures, don't let your macro stuff get in the way of your day trading. Like, that shouldn't matter. But at the same time, because we've been going down for 3 days or whatever, realize that this is the hole now, right? Once you've gone, especially to the downside, once you've gone down significantly, like more than 1% basically on NQ, for more than one day, the lows that come, so how I can tell it's in the hole, because I think this is hopefully important enough to go away from the live trading, because I think that personally it's pretty important. So the first spot that would have been clearly in the hole would have been, so you get a drop below this. Right, so this is way back. This is a big time frame. This is in February 26th. So that was bullish, right? And then you had consolidation here, and then we broke down under that consolidation, right? So if you want to be a seller, you want to be a seller on the break, either on this wave or on the break of that wave. That's fine. And then obviously a pullback into that area, super, super, super good, right? Short it all day long, totally cool with that. Once we break underneath a low of a day that had some pressure to the sell side, if we break below that down here, and then this area gets reclaimed, if that gets taken back, you can't be thinking it's still bearish, right? You might get caught shorting this and getting your runners taken out, right? But if you know we're already under this and you get a stop, you take a stop, it's okay, right? You just shorted in the hole, right? But that's the hole. You're underneath the down day's low, and you have not confirmed that that's new resistance. It's just hanging out here. See how it's like consolidating, right? There's sellers here, but there's not any sell pressure. Look at volume. There's just no volume. There's nothing there. So they lift, and then it's a squeeze, right? So the last thing you want to do is short out of the hole. That's even worse than shorting in the hole. If you get out of the hole like that, don't touch it. You can buy it, but don't sell it, right? So we did the same exact thing on a smaller time frame here. We had up, consolidation, break of consolidation, retest. You can short all of those, totally fine. You can even short this, still okay, right? What you don't want to short is, the break of this. But unless it's the end of the day. It was. So this was the low of the day. So once you get the low of the day, right? Now the next day we get a down and we go underneath the low of that day, right? You are now in the hole. So you can be a seller up here, right? Because we got up, we broke consolidation, we retested. That's fine. I would suggest not being a seller underneath yesterday's low on a day where you don't have additional momentum. Like, you don't know that until the day starts, but when there's no momentum to the downside, do not be short down here in general. So, like, if you're shorting here trying to get continuation, or here trying to get continuation, like, maybe you thought this was a breakdown and you shorted in the morning, but don't fall for it over and over and over again. Instead, recognize that we're in the hole. It's not necessarily going to squeeze unless we get out of the hole, right? What would be out of the hole? It'd be getting up here and holding up there. We got a pink bar up there, meaning sellers pulled their orders and price advertised up there, but nothing followed through. In fact, a seller came in with a star, meaning they're really aggressive, and then it was followed by a plus, which means that buyers likely got trapped up here. So the buyers got trapped, and then it went back to the other side of the consolidation area, which is basically the overnight range, right? Then beige book came out. We got an aggressive buyer coming up, but they could only produce a pink bar so far. So that pink bar meant that sellers were giving up. They were preparing for price to come back up here into the other side of the fair value and hit this. But instead, buyers are now giving up. We're getting a purple bar forming here. So for some reason, there's no buyers where they need to be. And therefore, the expectation, if this closes lower, should be that we're going to return to this low. The expectation should not be that we're going to break the low of day. in my opinion, that we don't have any evidence that buyers are giving up on that time frame. But we do have evidence that on this time frame, inside the consolidation area, they may be not willing to be aggressive here, and they're going to maybe wait until price dips a little bit and try again, is what that purple bar is usually foreshadowing. But remember, it doesn't count until it closes. So it might approach that close, 12-1, 65-25, and then suddenly an aggressive buyer comes in and we get a star. And that's why that star is there. It's warning me that, hey, if this closes bullish with these current conditions, that bullish close will be considered an aggressive close. And therefore, you can go ahead and get long at 12-25-50 for a swing. Because remember, this is the 80-tick chart, right? So knowing all that and having all those levels figured out, then you can zoom in real small and say, oh, okay, here's the bottom of my consolidation area. That makes sense that buyers showed up there. Then we got a nice little lift up, but they ran out of steam, which is why I took off my runners, right? And on this higher time frame, what that looked like is exactly what I was doing. It was basically buyers cutting their orders, right? And thinking you're looking to get long, and then suddenly changing your mind, being like, you know what, I think I can wait a little bit. I don't really want to be long anymore, and I don't really want to be long in this area anymore, so I'm going to cut my runners. I'm going to pull my orders to add, and I'll wait to see what the market's going to do. If someone happens to support lower than that, just on that level, and it rips, yeah, it's definitely still bullish, right? We did not cross the line in the sand. We didn't even test below it, let alone close below it. So it's still bullish on this tiny little time frame. But remember that our primary target at this point is this purple square, that rectangle. That fair value is still the target, right? And if you remember, I said I wanted to get out at 39.50 if I could. Now they might trigger again to get long, which would be great. And I'd take the trade if they are able to do it. Let's see if they trigger. It's not bearish yet. So basically purple bar followed by white star, not yellow star. It's got to be a bullish bar. Would be worth a try. There's really no reason not to do it. Nothing I can see anyway. Did we get under a plus or an X? No. Not to the upside. That would be here. So we're open. I'm open to going higher if we can close a bar bullish. If we don't close the bar bullish, there's nothing to do. And like I said, I'm not making decisions on this one generally. But this side, the smaller time frame, is looking bearish here. With a purple bar, if they print another purple bar and we can't get above that, it's probably bearish. 2 purple bars in a row, it basically means that buyers, like I said, buyers were giving up and nobody came in to save them. And that's usually a pretty clear sign that that level is going to get defended by sellers. So you don't necessarily go straight down, but if they do defend, if sellers do defend that level, I'm bearish. So like, assuming this one closes purple, and again, 15 ticks, so it might not mean much. It might only be for the next 20 ticks, 20 points lower. But if this one closes purple, oh, it's not going to close purple. They're fighting back. So if it would have, then that level becomes good resistance to short out of. But the buyers are fighting back, so they didn't give up. Well, they did for 1 bar. But this constituted a fight back. And so now it can't be a purple bar. The purple bars can only form if nobody fought back and buyers just gave it up. And the 2 reasons for that happening are they're very weak. Nobody's interested because of like resistance above us, or it's that we're approaching a support and they're gonna hold back their efforts until we get to that support. That's often how those purple bars work. So if you have a purple bar into a support and then you see an aggressive buyer show up all of a sudden at that key level, that's better than the aggressive buyer showing up all by himself without the purple bar. Because again, it's one thing, you don't just want to short because people are giving up, because buyers are giving up. You don't know what the market's going to respond to that with. They might respond with an aggressive buyer, and that's definitely not something you want to short against. So we look for these purple bars, and then if we can get a bullish bar to close, all of a sudden it's actually a pretty good entry. If it's got a dot on it, then it needs a pink bar above it before you have confirmation that it's bullish. But a bar here that's not pink, followed by a pink bar. Actually, really, it's 2 bars. It's usually a pink bar, but just 2 bars. One and then one more. Bullish. Preferably this one not being pink. Because I want a real buyer to come in there, not just sellers giving up. Otherwise, I'm probably chopping, right? If I'm getting buyers giving up and then in the same exact range immediately after sellers are giving up, the only reason that happens is if you're in some sort of consolidation chop range. And if that's the case, you probably need to zoom out or zoom in maybe. But you're going to need to wait until we break away from that range and then find a setup. You don't want to be getting involved when both sides are giving up. But that probably that phenomenon where you have both sides just like conceding a level to each other, as soon as someone shows up and takes it, you're going to know real fast whether or not they get any progress. Okay, it looks like we're not going to get the bullish setup. That's too bad. We're trading underneath this key level, which is this dot right before the X. And so a close down here, any bearish close down here, basically invalidates all my bull trades, which would suck because I actually got calls at 12:155 and I held them for my target. So that would be too bad, but it happens. Today has not been my best day. I don't always trade great. I'm not doing horribly. I'm down small, but I was down bigger. Here, I'll show you. I don't mind sharing my losing days as well as my winning days. Let me make sure I don't share my account info though. That would suck. Okay, so I am down in the PA accounts. I'm down 431.50. I'm thankfully trading smaller size because that could have been a lot worse. But if you look at the trade counts and the win rate, you can see that I'm not trading very well. I've got too many trades. Now it is micro, so you're gonna have more but 50 is way more than I need normally. And my commission and fees is like it's almost like another it's like equal to my losses, right? So like that's a sign that you're probably over trading. And then the other sign, my win rate is below 50%, which for me usually means it's a red day, or at least about like it's not a great day. I'm not trading very well because if I only trade the setups that I'm supposed to, I'm going to achieve like at least a 60% win rate on most days. So these are not good numbers for me. It's kind of embarrassing, but I just want to show you that not every day is great, right? Like you got to be able to manage the risk when you're not doing everything right. And I misclicked something. I sized too big, and I had the trade copier didn't like exit a position when I stopped out on my other one, and I didn't notice it right away. Like it was just one thing after another that I was like making these stupid little errors, and then I recovered from those just by trading on process. But the fact that I was aware that I was making all these errors was making me doubt what I was doing, and I was starting to get like reckless, like the beginnings of tilt. Like I wasn't on tilt, but I was emotionally charged by the fact that I kept making mistakes, and that extra emotion made me make poor decisions. So at one point I was down, I think like 18K. Right now I'm only down like half a stop. So realize it's not the end of the world. If we close here and I don't have any more trades, I'm fine taking a negative whatever it was, $400 day. That's not a problem. I will recover that in one day, most likely, right? I'll probably recover it tomorrow. It doesn't matter when at all. But the important thing is to manage those drawdowns. So it's like it's important for me to identify that like being down a couple $100, basically like half of a stop, right? It's not that big of a deal. I shouldn't be forcing trades, especially seeing that my win rate is not great. And because that can mean two things, right? It either means I'm not trading on process, which is in this case is what it means. And the other explanation for not having a good win rate when you're using a systematic process is that your process is not in optimal conditions. So, for instance, you might be trading during like Powell speaking, right? Like no one, you can know what the market wants, but if he says something that's unexpected, those setups are going to break. So, your expectancy is probably lower on a day when you have like constant new information coming into the market that because I don't have the edge of being able to interpret that information, but some algos do. Some algos, all they're doing is reading Powell's quotes and trading off of it. So those algos are going to kick my ass on days like today, right? And so knowing that they're in the market and it's their optimal season, the only solution is don't trade or size down. And so, like I said, thankfully I sized down. Otherwise, it would have been a brutal day, honestly, because I probably would have hit max loss and not been able to recover it, which would have sucked. But thankfully, I was trading a small size, and so even though I took 3 stops, in a row, I was able to recover back from it, not perfectly, but at least close to back to break even. But it's definitely frustrating when you make decisions that you know are wrong, and then you let those emotions, that awareness of making a mistake, influence your trading, right? And that's exactly what happened. Okay, cool. Hold on real quick. Let me just answer a text real quick. Yeah, so it's like I said, you have to be accepting of the fact that you're not gonna be perfect. You're gonna make mistakes, and sometimes you're gonna do everything right and still lose, right? But what we do have control of is how we manage the drawdown. Like just the way the market is, you're gonna have some days where things don't work. And like I said, today that wasn't even the problem. Today it was me making mistakes. But even if you do everything right, you have to be ready for that day where stuff just is not working, and the only way to survive is to step away. And so knowing that those days are out there and that they're like randomly placed, basically, I can assume that they're randomly placed. Like if I for instance, like let's say you take your metrics and you say, okay, based on a back test, I should be green 65% of the time. But that still means that 45% of the days are actually going to end red, right? If that's your metrics, then like ending red can't be that big of a deal emotionally. You can't let something that happens 45% of the time risk blowing you up. So if taking a red day is not unexpected, especially if you're going to see them more than 30% of the time, which for most of us is the case, honestly, I think. I mean, some people are pretty consistent, but when I say like you went red on the day, most of my back tests show that does happen. It doesn't, right? It's the majority of the time it makes money, but sometimes it doesn't. I've seen it happen, right? Where everything is right and it still doesn't work. So if you let like whatever that number is, right? Like 40%, 45% of the days where you're going to lose something, if you let any of those days risk blowing up all the work that you did on the winning days, the chances for your survival are very, very low in this business. You just have to find a way to not let it eat you, right? And the best way to do it is to build it into your system. So, for instance, like on my Rhythmic, where my performance counts are, I have it set up so that if I take a loss that's bigger than like my good days, I'm just kicked out for the day. It just shuts down. Now, technically, I can go in there and I can turn it off, and I know how to do that, right? But the fact that I would have to go through the process of breaking the system to be able to trade would alert me to the fact that something is very wrong. Because I know that if I just grind my system and do exactly what I'm supposed to do, I'm good, right? I'll make money most of the time. That's been my experience, right? Past performance is not indicative of future results, but that's been That's been my experience. And that's what I see whenever I do the back test is if I just do what the process says, most of the time I'm going to win. But sometimes I won't, even if I do what's right. So that really is the key, is accept the fact that even the very best traders take stops, and even the very best traders have red days, even if they don't talk about them. But the difference between a trader that's really good and keeps his money and a trader that actually had huge potential but blew up and never got to his potential, the difference is, did they manage risk? Did they have a system, a process that protected their account from poor trade decisions? If you can really focus on that, that your chances of survival are just exponentially better. Of course, you also need an edge. You do need a process with an edge that actually gives you more wins than losses, right? Like you need to win more than you lose. That seems kind of obvious, but it's something that a lot of people kind of don't think about. It's like we're not in this business to get lucky. Hopefully, you should be in this business to exploit some sort of an edge, some inefficiency, right? And so all of my setups are based on either the profile or the footprint, right? It's either this that's giving me the hints, or it's this. That is, or it could be the order flow, right? The numbers bars. So it's, which I guess is pretty much the same, but I've got some extra. I've got two of them. And then there's also the point and figure charts, right? So these are the ones that are like producing the raw information. But I don't know about you, but I would have a really hard time trading on this. Trying to interpret all these numbers would drive me nuts. That's me, right? I tried my best to like color code some of this stuff and like alert me to certain conditions, but even then, all of the extra information, it's just too much to think about. I can't do both. I can't interpret numbers into. So my brain can do one of two things. It can either use the numbers to determine where my targets and stops and entries are, or it can use the order flow numbers to interpret whether or not bulls or bears have control. I really struggle because I'm a little bit ADHD, I think. I really struggle with flipping back and forth between thinking about the level, the price level, and whether or not that's an entry, a stop, or a target, and numbers that are related to order flow, such as the volume delta or the the big buyer at some price. I personally have a really hard time with that. Not everybody does. Some people have no trouble with that. But like I'm fine with numbers, but when the numbers mean different things, like that, where one part of my brain wants to calculate stops and targets with numbers, and the other part of my brain is trying to interpret order flow. Like I said, like from a numbers, like from this, right? I can't interpret this in time. I can't do it. Like some people can. Some people can just trade straight from here, and they'd zoom into all the numbers. You wouldn't look at it like that. You would zoom it all the way in, and you'd actually look at the auction itself, right? And you trade just off this. And that, if you can do it, awesome, right? Keep practicing. You're doing great. But I find that that's extremely taxing for me to have to do that, interpret it, which I actually kind of enjoy, but it's really taxing. And then also having to make decisions about putting in orders and what's my price target and what's my stop. It just all gets jumbled up in my brain. So the only way for me to do both, be able to execute trades effectively and interpret it correctly, is to figure out what the conditions are that I care about on the footprint, and tell Sierra Chart to alert me with signals or colors whenever those things are true. So I don't have to do the calculations of how much bigger of a number is that. Oh, well, what about diagonally? Oh, well, what about, you know, compared to volume area high? What level was that again? Oh, yeah, it was this. Okay, well, let's go back and see that. Wait, no, that was my stop, right? Like, that's where my brain gets stuck, is when I'm thinking about all these different levels, all these different numbers. And by the time I figure it out, I missed the execution. And it's super frustrating. But if I instead ask Sierra Chart to interpret all of the footprint and just give me a color, I can remember and have no trouble processing things like get behind this yellow dot and it's bullish, and then I just have to look at the range predictor and say, you know, get long here or and stop goes here, and then you get the trade. You know, like that's oops, I went too far. That's a lot easier for me than having to actually do the interpretation real time. And then I have to wonder, is that condition that I think I see, is that legitimate, or is it close to not being that condition? Whereas with this, we had to program exactly what each thing was. So yeah, it takes time, but once you've done it, it's real easy to go back and decide whether or not you like the condition the way it is, because if the pattern works, you've got something, you know. And all you really need is just a couple patterns, and you can stay pretty busy. And like I said, after we close, I'll go over some of the ones I'm using that I used today. Yeah, some of them I played very poorly, but the setups are there. And then I can also show you some of the ones that I have used in the past, but have kind of it's hard to keep, like, I don't know. I think we probably have like 120 different combinations that you can use, and you can't do them all. You have to decide which ones are working best, or which ones like fit how you like to trade. Some of them are momentum trades, some of them are pullback trades, some of them are reversals. So yeah, like it's nice to know a lot of different setups, but really what you want is to get really good at trading just a handful. In my opinion, that's the way to go. Like, it's fine to have like 3 reversal trades and 4 momentum trades that you're looking for. I don't think there's anything wrong with that. But just know that the more complicated you get it, the more mistakes you're going to make. And that's one of the things I did wrong today, is I looked for patterns in the wrong conditions. And primarily because I've been practicing some of these new patterns, and when I see them, it's hard to not auto click the button without realizing that, oh, hold on, that's right, there's this other condition that I need to wait for. And that's just how adding new things goes. So you're gonna have some growing pains. I mean, I remember when I first started learning how to use some of these signals, like my very first couple setups, I made all sorts of mistakes, right? So you really, in the beginning, there is a learning curve. You need, for every pattern you add, you need to practice figuring out when it works best and when it rarely works. Working with a team makes that a heck of a lot easier. You know, doing it by yourself would be damn near impossible. But some of us enjoy that work and others don't. And those of us who do enjoy sort of digging into the signals and the patterns, we do a lot of the work and then we'll share it with the group. Or, well, it usually goes through Simon. So we'll share it with our coach, and then the coach decides whether or not it's, you know, if he can find a way to like explain it to the group without causing mass confusion, because adding new trades is hard. But it is important to be able to adjust, because the market does change. And so there's going to be certain conditions where trades that you relied on did great, and now we haven't seen that condition in some time. For instance, like if you have a really good momentum setup that works really well when the market is moving, when NQ is making rotations of like 30 points or more, you can just trade with the trend and take those momentum setups. That exact same pattern, it'll look similar, the pattern will, on like days when it's not doing that, but it won't work. So you need to know that, like, okay, even though I have these 3 signals in a row, it's not relevant for this environment because we're not trending, right? So things like that is where that's where some of the stuff gets pretty tricky. But I'll tell you, it's a hell of a lot harder to do that and interpret the footprint at the same time. So it's, yeah, for people like me who just, like, I'm plenty smart. It has nothing to do with intelligence. It's just like I get hyper focused and I can't hold all this information in my mind at the same time. So yeah, for people like me, it's like it makes the impossible totally possible. It's like all of a sudden, like I can just kind of relax and wait, because I know exactly what I'm looking for, right? And particularly if I know that I'm only looking for, like in this, like let's say this certain situation, right? We've already gotten underneath the line in the sand where I already said I really don't expect this to be saved anymore. The bullish move to be saved anymore. So we're probably headed back to the back of the purple rectangle, right? So we identified that up here. So there's really no bull trade here. The only opportunity would be if we got some sort of a lift, then I might be able to short. But just knowing that you really have nothing to do, and versus the times when you do, like when there was a decision to be made, like when the trade was up here, and when I got out, we could have technically flipped, but I wasn't bearish, so there wasn't really any reason to. But yeah, it really helps me decide. Like I can see where the decision points are very clearly. So I'm not constantly asking, is there a setup? Do I have to do something? Like, should I be long? Like, no, it's like, I can see it. If we're under this, it's not long. If we reclaim this, it could be long. If we can get above that X, it can squeeze. As long as that holds, like if we hit this and reverse and get a bearish close up there, if it has the pattern, if it has a pattern on it that I've studied and I know the probabilities are that it'll go at least 10 to 20 points lower whenever that happens, then I'm willing to take the trade. Other than that, I'm not going to take it. Just because I think it's going down here, I'm not going to enter a trade. I don't have a setup. I have no idea what to expect with these 3 bars coming here. Like, it looks bearish, but I don't know if that's going to stop, right? Like, I don't have a pattern. On the tiny time frame, I might get one. We can see here. Let me see. As long as it's going this slow, I might not trade it from here, but usually I use this for confirmation. But let's just see. So we have an X here. So it's bullish if it gets over and closes over that, which it could not do. It does appear to be bearish on this time frame as well. So assuming we can't close over this, is there a bear trade? Trying to decide if pink bar star is good enough. We don't really have any range here to trade with. I don't think there's a trade there. See, the problem is if we got too much of a pullback, it'll trigger the it'll be back to being bullish again. So you'd have to be comfortable trading a breakout, and there is no breakout pattern here. Probably because it's balancing and it's not gonna break down, but that's not always how it works. It may just be that it doesn't have any reason to break down, but it could still melt. You can't say just because a pattern isn't there that it's going the other direction. And again, on the higher time frame, it's balanced. Right? We peaked out of the value area there, peaked out of the value area here, and it's just been sweeping back and forth through this consolidation value area. That's all it's doing. So even if it does come down here, it certainly could break this low, but it doesn't have to. It could just get picked up right here and come all the way back up to the top of the rectangle. With a pink bar, especially if this closes purple, it's basically just a pivot. And then, oh, did it close? Did it close purple? That'd be great. I think it did. And then you'd know, okay, if we can break up here, it's probably going to go higher. If it breaks down there, it's going to go lower. Did it close purple? It did. It did close purple. Okay, cool. So here, I'll put the levels in. So if we get a close above this, we'll make it red. Or close below this. We should know what direction we're going. Now, it's technically an 80 tick close, so one of these little closes wouldn't work, but a rotation so if we go lower, and then can't break out back through that, it's bearish. Because that pivot, now it can come all the way up to the top of the pivot and still break down. That does happen. That would also be bearish. But if it breaks through the pivot, the red, if it breaks up, I guess there's two reds there because there's a POC from a previous day, but if it breaks up here and then comes back and bounces off that area, that is bullish. And there's really nothing to do inside of the pivot. Inside of these two red lines is just going to be chop, and it's going to be nasty. Typically. And that's probably where we're going to stay for the day, I bet. I bet it just chops around in here like there's so much options activity these days that like the market has a lot of incentive to go nowhere, which is really frustrating for day traders like us. But yeah, when there's too much options activity, it gets pinned. Particularly because ES is like right at 4,000, more or less, right? Is it 39.77? I guess it rejected 4,000. So, but yeah, that level is going to act as a magnet, I imagine, because so many people will just take their higher time frame trade off of the big figure. So it shouldn't be a shock that for a couple days we wiggle around that level. Oh, and aren't we like right by the 50 moving average too? Like that, like all of that stuff. Like I don't really use it for trading, but it's kind of nice to know it's there because it explains why price won't get the fuck out of here. You know, and it's good to know that because you might want to avoid breakout trades outside of that consolidation. Like if I'm looking at ES, for instance, see how this is like an expanding range? So we're consolidating, but we're expanding. So like it doesn't make a lot of sense to take a short below this low because more often than not, you're going to expand up. And it doesn't make a lot of sense to buy the breakout over this high because more often than not, it's going to fail, right? And that's going to continue to be the case. So the breakout here is likely to fail. When will that stop happening? When this state changes. Once we get up, pull back, and it holds, now we can get a big old rip. Or once we get breakdown, comes back, and it holds, now we can get a big old dump. But looking at this, just looking at the big picture, keep in mind that like on a higher time frame, we are actually balancing inside of a consolidation range, right? Like here, look. See how like big picture? Here, let me turn off the levels. Big picture, we were bullish since the beginning of the year, and then we had consolidation. We broke down underneath that consolidation, came back, rejected off of it, and went lower. Normally, that's bearish, right? This move is usually bearish. It's usually something like an ABC, right? Whatever that's called. I'm not like an Elliott wave person, but I know that everyone knows what that S curve looks like, right? Whether it's like Wyckoff or Elliott wave or whatever, but that would be expected. But the fact that the higher time frame had this consolidation down here, and then we did the same thing, left it, bounced, and exited the area, came back, made a higher low, and went, right? This whole area down here, you should expect to have a magnet, right? But it didn't, the price didn't get there. It got there, it reversed, right? So this was rejected. This is, the shorts are trapped here. We've been rejected. Sellers are trapped down here, but we did the same sort of thing up higher. See how we got consolidation? We fell back down. Now, if we reject that, guess where it's going? It's going back here. We don't. We go right through it. We expand, and eventually we come back to test that area. So if we wanted to, we could take the profile, the volume profile of that whole period, because on a higher time frame, that's actually consolidation. Like if you think about it, that whole period is consolidation. So it would probably start when it started to like stutter step, like here, and then it stops right before the breakout, like right there. So if we wanted to, we could think about this as the high, and look how nicely that lines up with support resistance. See that? and then this is the low of that consolidation area. Not surprisingly, it acted as support here, and it acts as support here, and we're trying to use that volume area low as a support now. So that whole volume area, this is fair value. That's fair value. If we can reject outside of fair value and then go that same direction, you then know that that's who's in control. So for instance, if we can get above this and then come back to it and bounce, it's bullish. If we can get underneath it and come back to it and reject, like if this would have gone lower here, that's bearish. When it doesn't happen, it's another consolidation, right? So now we'd have to do the same thing. You'd go where it started, and we don't have the whole thing because it's still it's still in fact a consolidation zone. But now this is our current consolidation zone, and you can see that we can leave the area, but if it doesn't hold, it's going to come back and sweep all the way to the other end. See how we can leave the area, but it sweeps all the way to the other end if we can't stay out, right? We leave the area, we can't stay out of it very long, comes all the way to the other end. Leaves the area, can't hold outside of it, it's probably going to the other end, right? So we shouldn't be surprised if it goes to 39.65, but it's probably going to continue to find buyers, maybe under this one, but it's in a consolidation range. It's just expanding. It may rip up here. Eventually, wherever this POC is, that red line in the middle, that might be the support or resistance that finally breaks the edges. But we don't know which one that is. Like this looks like it could have been it, but it closed bullish, right? This one tested off of it and rejected out. This one tested off of it, tried to get out and failed. That's why I bought the calls, by the way, was this. I saw this and I was like, that could be a rejection. We might be coming back, rejecting off POC, and now we're going to go. Actually, it was this one. This candle is where I bought the calls, thinking that we're probably going to reject out of there. It still might happen because it could come all the way back to here first, but it could still happen. But we had this little support here they're trying to play with. Now, if it comes back to the POC, if it goes back to 39.88, let's say, and then rejects hard, I'll probably sell the calls, because what's the chances that we lift if they reject there, right? So you can do the exact same thing with NQ. You can do the exact same thing. And like I said, with the algo, once I know what I'm looking for and where, now I just have to find the locations. So we did actually reject off of that purple bar. Remember we had that pivot? So this pink bar followed by purple bar creates a pivot. We tested under it and rejected. That's actually pretty bullish. Unexpectedly, actually. But this little move should not have been foreshadowed. That might have trapped some people because they got under this. They got to close under this. It looked dead. I wasn't watching, but this could create a squeeze. We've reclaimed this X, and I showed in another video how that losing it like this and then reclaiming it is actually a really good move. So if we can get a pullback, we could probably get long. How much time is there? Oh, there's only 20 minutes left in the day. I'd really prefer a pullback. And we did get the blue dot too. So that's what I want for confirmation, or the blue dots now, because that's a sign of volume aggression. So here you got 3 of them already. So it's probably going to pull back. It can print more than 3, but 3 is the average for a breakout. And when I say breakout, I mean breakout over the dots. So if it breaks over a dot and prints a dot of the other direction, in the other direction, it usually gives you 3. 1, 2, 3, and then it calms down. Is it always 3? No. It's sometimes 1. It's sometimes 4, but the average is 3. And so if you get more than 3, it's clearly a squeeze. But again, that's a very small time frame. And here we've only gotten 1. So what I would expect is some sort of pullback, and then we get more. But maybe that's not going to happen, because it's the end of the day. And like I said, this was definitely a trap. I actually had the signal here too. I wasn't watching it. We got it here on the way down, and then it flipped and gave us the ring on the way up. So this will act as support now. Here, I can get rid of this. This green candle or green bar right here should, see all this green? That's volume. So if it's not bullish, that acts as a magnet. When they can't retake that, it's bullish. So this is now support. Sellers are trapped in this candle. That's what that is. right? Once we leave it and we try to pull back and we can't, we know sellers are trapped here. So now we just need good risk reward, right? We need a place to put our stop. That's the reason why I'm not long. So I don't have a good place to put my stop with good risk reward, considering I have 20 minutes left in the day, and really my support's down here, right? I don't want to have to put my stop down here. I can't take a 35-point stop. That's not okay. Like my average trade only makes 12 to 20 points. So I'm not going to take a 30-point stop. But if we can get a pullback and then it can create a higher low, I could scoot my stop up below that and then maybe ride the next wave. But I don't know if they're... The only thing keeping me from trading now is the time of day. Oh, we actually got a pink here too, suggesting momentum in the market. On a pink bar, though, that can sometimes be a problem. The pink background here means that basically the bar formed due to momentum. So sellers are actually doing business. Like the people who were selling are squeezing out here. And that's great if you can get a bunch of them in a row. But when you just get, see down here, you just got one, it's like, it just kills it. So I think it's going to get stuck here, personally, at the top of this pivot. And it hopefully will get us a pullback, but it might not. They may just squeeze right through it. But I'm hoping for some sort of a pullback here. That would be great. Okay, they put a dot way at the top. If they trade behind that, you can technically sell. But I wouldn't do it while it's squeezing. And right now it's potentially squeezing, so I wouldn't take it. But if they do trade under this, that is technically a short setup if it's bearish. It's just not. After this trap, it's not bearish. Because that was a higher low. See that? Oops. That was a higher low. Here, I can get rid of this one. It was a higher low on a higher time frame. So it's not bearish on this time frame anymore. If the higher time frames than this is bullish, then this tiny time frame probably you shouldn't take the short trades. It's not that they won't work. The expectancy won't be good. So like, why risk it when you're just going to get a bull trade anyway? Like, why be in a rush? You can just wait for the trade in the direction that will actually work, maybe for more than 10 points. There's nothing wrong with counter trend trading. It's just, it's got its place. You have to be patient with counter trend trades. You have to let it develop. You don't want to be the first aggressive trader in the opposite direction. That's just asking to get steamrolled. Hold on. All right. So yeah, there's no way I would take a long here because of that pivot being there. But technically we are getting another green one. Now notice these can print one bar late. They're not necessarily entry signals, but they identify a level. So this level now has to be held. And they may do it. But if they can get underneath it, it's going to go to the next blue one. Well, that's not very far away. But it gets tricky when you get a bunch of, like I said, a bunch of blue dots in a row. It's vulnerable. It's usually a squeeze, but if they beat a blue dot when there's a bunch of blue dots in a row, it can retrace the entire thing. So like this. See how they got 1, 2, 3, 4 all in one rotation with no down bars. Now, like, you can't even lose this. That's what sucks. So like, I'm not going to get my trade is what it's telling me. Because it's going to either go higher without a pullback, which it looks like is what it's doing, or it's going to retrace the whole damn thing. So it's just like, you just miss it, right? Like, it's a sign for me that I shouldn't even worry about buying dips at this point because it's probably just going to explode. So I guess I haven't thought about this, but I suppose because I know that, I could probably just put the stop there and fucking chase it. Now that I think about it, that's probably okay. Huh. I don't know if that's a good idea. That seems really reckless, but just thinking through the logic, it's gross, but it actually kind of makes sense. It's like I don't know what the expectancy is though. It might only work 30% of the time. It's not going to be high. It's not going to be like the other setups where it's like 60% of the time it works. It's going to be like your breakout trade with like a trend following trade, right? So it's probably going to have like a 35% win rate, but the stop is small. It's like 10 points if you do it right. So the idea here, if I'm not being clear, the stop would go here, one bar below the dot, and the entry would be anywhere in this bar's range. So here or here would be the entry long. I don't, like I said, it's not going to work a ton, but if it's super bullish, if they give this out, if the sellers take this level, I know it's going to go further down. So I might as well just put my risk right there. There's no reason anymore to put my stop down here. Because what made me realize is if I'm trading this, I'm trailing my stop with the dots. So like now my stop goes all the way up here, under that, like 12 to 16, maybe 1 point extra for cushion is where my stop would go if I was still long. So because of that, technically, it might be okay to go ahead and buy anything in this range. It's just that it's going to be wrong sometimes, a lot. It's gonna fail more than it's right. But when it's right, it potentially gives you a big breakout. So if on a higher time frame, you have a level like we did, like this red level, where it's like, if they take this back, it's gonna go all the way to the other side. If they don't take it back, then that's probably a good place to buy a breakout. We've got yesterday's POC right above us, and then we've got my daily target, 12/2/39.50. Oh, that's right, I still have the calls. I forgot. Hold on, let me see about the calls. I totally forgot about them because I thought they were gonna stop out. Nice, they're up. Okay, current. What? They're not quite up $1, but they're up a bit. Well, we're not done yet apparently. Okay, that's my target though. I'm supposed to take profit at my target. Hold on, let me get rid of this. Wait, let me just make sure. Yeah, I guess I have to. Okay, I'll wait for the bearish bar. If they put in a bearish bar, because it's squeezing. I have no reason to think just because I had a target there that it has to stop there. But, oh, I'm probably being greedy, aren't I? I'm probably being greedy. What time is it? 12:46. I mean, we're not that far from the high. Wow, this looks really strong. Like, if they close this like this, I don't know. I hate being indecisive. So ES could go all the way back up to here, 40.24. I don't have a great reason for giving him up. We rejected this, you know. That wasn't the plan though. Fucking A. I hate having fucking rules. Fuck you, rules. That's okay. Rules are good, rules are good, rules are good, rules are good. If it closes bearish, I'll drop the calls. It hit my target. I should be happy. It's fine. But man, do I want that to like all of a sudden you start seeing stars. It's just like wait. All right. Placed and filled. Oh, they didn't close it. I thought I saw him hit it. I'm filled. I'm out. So, but it was a decent day up. How come I can only see? Well, it wasn't quite $1 per contract, but I'll take it. Cool with that. I'm cool with that. Considering that I got it for like I think I bought it at $3.76 or something, and it went to like. What did I sell? Let me see. Because I was ready to hold it overnight, so I did. They weren't 0 days. It was like a week out. And usually, if I go any further than a month, I do a spread. But this was 314 calls. QQQ 298 calls. Sold at 430. Bought at 372. Okay, I'll take it. I mean, for a day trade, that's fine. Like I said, in the back of my mind, I have a suspicion that we're going to close at high a day and squeeze overnight, but too many times, way too many times, I have a perfect plan. It does everything I ask it to, and then I'm like, oh, this could keep going, and wake up the next day and it's like gone through the stop. And not only did I lose an R, but since I turned a day trade into a swing trade, now I've lost, like 2R or something. And it's freaking frustrating, right? Because like you work hard to do this right. At least some of us do. And so like even though that decision seems really obvious, probably it's like, hey, you had a plan, like just do it. It's not easy. It's not easy. But the right thing to do is just follow the plan, and then if if it does go another 200 points, right, then you just have to integrate that like into your next plan. Like just try to break down like what could have told me that I had that room, right? So like for instance, I could say, hey, I didn't notice earlier that the current consolidation of ES was significantly wider than NQ. So if this does just roll all the way through here, I can be like, hey, if I've got a setup where ES is wider, I can go with the N. I can buy. If I do end up buying NQ, I don't have to exit at the NQ target. I can wait to see if ES can hit their target also, because in this case, NQ just did that already. Like NQ already got to the other side. Here, I'll show you. So it's just the two charts sometimes are just not identical. So NQ already broke out of the consolidation and then came back and then tested it and then tried to break it, like we talked about, and then bounced off of generally yesterday's closed really, but it was near the POC, and then they're trying to break out again. But look, they've already gotten through it, right? They're already breaking out, whereas ES is not. ES just looks different, and so I think it might be okay to say I'm going to wait and see if ES can hit that target first if it's a little bit wider. Unless I drew that from a higher time frame. Now that I think about it, I think I drew that from a higher time frame. Hold on. Am I going crazy, or I drew it from a higher time frame? Okay. So on ES, what I did live was this, I think. Was it the whole thing? God, I don't remember. Okay, let me check. Let me look and see how I actually did this. Because I just realized I think I actually did this on a higher time frame. Started on Tuesday the 21st at 18. 21st? Yeah, it's this. So I took this one and I expanded it. That's what I did. Yeah, no, I'm right. It did. Yeah, I was like, I thought NQ already hit it. Yeah, when I did my research this morning for the calls, when I was looking for the calls, I found this level 12 to 39.50, that VR level was aligned with this value area high from the big consolidation. That's why it was my target. So my question is, that I don't know the answer to, is when ES is far from that same target, drawn exactly the same way, they're like halfway there. How do I deal with that when NQ has already hit it? Does it mean that I have to be more cautious? Or does it mean that I can be a little more aggressive? I actually don't know the answer to that. I do not know the answer to that question. But it's definitely something I'm going to look into, because I think there's a potential opportunity there. Well, it's another complication. It might help me decide those, like make those difficult decisions, is before making the decision to get into the trade, to check to see if ES and NQ are aligned, and if they aren't, then I just have to know what comes next. Like, what do I do about that? But I hadn't even thought of making sure that they're together. They often are together, but we shouldn't assume they are, even though I did. I shouldn't. I shouldn't assume they are, but I just don't know how to interpret, how to plan differently when they're not. There may not be a probabilistic way to do it. It might just mean if they don't line up, then your trade might not work so well, But maybe, and I don't know. To be honest, when those two charts don't look the same, the one thing I have found is that I have a hard day, and I have a losing day today technically on the futures. So perhaps it means when they don't line up that you have to be more conservative and you have to take the profit at the tighter one. Like whichever profit target take comes first is the one you take. And that is what I did. But that was just happenstance. Had I taken it on ES, I would still be in the trade. And that's what's a little bit concerning. It's just like, wait, what does that mean? Like the fact that I wouldn't be out of the trade if I did the exact same thing on ES, but on NQ it was clear exit. Yeah, you have to figure out whenever you have those conflicts, you've got to resolve them. Because otherwise your process gets less systematic. For every it's okay to have some things that are intuitive, but for every aspect that doesn't have a systematic approach, you're going to add variance to your results. Doesn't mean you're going to do worse. It's just going to be wider variance. The more systematic your decision making, the closer your results are probably going to be to a back test. Like I said, that's been my experience. I guess I don't know that for sure for everybody, but that's been my experience. Is that what happens when I try to add things that are not necessarily based on systematic process and statistics, and instead are based on this, I've seen this happen before, or whatever, just like instincts. It doesn't mean you're always going to be wrong, but you don't know how often that's right and how often it's wrong. So the result is your good day, the more of that you have in your system, your good days are probably going to be bigger and your bad days are probably going to be worse. You'll just have a higher volatility in your equity curve. If I had to guess, that's been my experience. And the more systematic I've made my process, the more consistent my results are. And while it's rare, if I look at how much I make per contract, it's rare to have a huge banner day. But what's awesome is I started doing this with 4 micros, and now I can, depending on the conditions, I can trade all the way up to 3 minis. So even though I'm doing basically the same thing, and per contract, it's not really all that different when it comes to results, the actual daily gains are way higher. And now my regular good days are what my banner days using instinct used to get me back in the day when I didn't have a great process. I mean, making $1,000 in a day trading 4 micros is tough. You have to have a really good process, to be able to make. Now, you shouldn't be losing $1,000 a day either, but usually that's going to be a hard thing to achieve on a regular basis. You're going to have days where you're right and it'll work fine, but that's not going to be every day. Whereas if you're trading 1 mini, or let's say 10 micros, if you want to scale in and out, all of a sudden, while that $1,000 might not be a reasonable goal for a daily, if you only have one account with 10 micros or 1 mini, you might not hit $1,000 on a regular daily basis, right? But the potential for having $1,000 day is actually possible to realize. Whereas if you're trading 4 micros, you're gonna have to get lucky basically with a trend day or something, and just be aggressive enough to add to your position. Oh, I guess if you add, then you're technically not trading 4 micros, are you? So yeah, all I'm saying is that back in the day, I thought that the answer to this game was to trade more. I thought that the way you get better is you trade every turn, and trade all day, and build up enough wins that you have an explosive day. My experience trading in the room and watching other successful traders, and then also experiencing this myself as well, that's just not reality. Reality is you get more consistent, and then you build your piggy bank, and you're able to risk more on every trade because your win rate's getting better. And as a result, rather than having the amounts that used to be hard to achieve without luck are now just your regular everyday good day. And the great thing is if you keep doing that, there's not really a ceiling. I mean, there is one eventually, but it's nowhere near where you like. It's very scalable, right? If you can do this with 4 micros, you can do it with 4 minis. If you've got the capital to handle the losses, right? The problem is that if you can't manage your drawdowns, you're going to blow up in like 3 days trading 4 minis. So you need to have a process that handles drawdowns, and you need to have funds so that you don't blow up from 2 bad days in a row, right? So you'd have to say, like, what's my stop? How often do I take 3 stops in a row? Is it possible that I take 3 stops in a row 2 days in a row? If I quit trading after taking 3 stops, how likely is that to happen? And then do I have enough capital to handle 6 stops in a row? And if not, well, you're probably trading too high, because most of us have taken 3 stops in a day, doing everything right. It sometimes doesn't work, like I said before. So there is the only ceiling for size really is what your account size is and what your risk tolerance is. Obviously, everyone's different, and past performance not indicative of future results and all that. But that is the real ceiling. The futures markets can handle big moves without making or a lot of contracts without influencing the market. It's not like we're trading penny stocks, right? These are equity futures. Like, my coach is regularly pushing at least 2-digit minis, if not more, pretty, like, just as a normal, like, just like I'm pushing single digits, he's easily pushing double digits. So when I take 3, he can take 30 and nothing happens, right? It does not spike the market. And plenty of other people in the room trade way bigger than I do. And it's not like because we're all taking the same trade that it makes the likelihood of it to work better. It's just not the way futures work. The market is way too big. I mean, if you trade during, like, Globex maybe, but maybe you'd have a hard time getting out, but usually you can get out. And that's the thing. There's really, in my opinion, there's no reason to have a goal much higher than, say, 30 contracts, in my opinion. I mean, it's fine to dream big, but if you can do this with 30 mini contracts, do you realize how much money you'd make? Like, why even, like, in my opinion, why even risk any more than that? That's just me. I mean, I know some people are like, I want to have $1 million day. It's like, dude, if I could consistently make like 30 grand just from trading, like, all, like, as an average day, like, there is no reason for me to put $300,000 down. But like I said, a lot of people differ. A lot of people are like, hey, it was an easy 300K. I'm going to push it onto my best trade, and I'm going to have $1 million day. If you want to trade like that, that's cool. Just realize that you only get so many shots, right? If you're going to do that, if you're going to play the house's money, and again, I'm not against the concept, but there's a certain level for most people where they're just going to be satisfied with, like, average. And I don't know, maybe that's not everybody, but for me, like, making $500 to $1,000 a day like I'm doing now, it feels good. I feel like I'm doing something, but I also have the clear vision that I can make this way bigger if I keep working at it. But there's a certain point, there is a threshold where the dream to get bigger is going to butt up against the fear of blowing up. And it should. That should be pretty rational. There's a level where it's like, okay, I'm all about making, like I said, for me it's about 30K. And it's like, it would be freaking cool to have a 30K day as, like, my, regular goal. That would be insane. But the idea that I would then take that, like, month of 30K wins and roll it to get bigger, right? To try to put it on a trade to see if I can make 300K. Because that's how people make big money, is they size up with their winnings, which is called playing house money. You have to be aware that your probabilities are still the same. Assuming you're still running the same program, the same system, your probabilities are no better just because you're trading bigger size. If anything, it's worse. If it gets too big, or you try to get in when there's not a lot of volume, you may get trapped just from your trade. But that's not going to happen until you get up to, like, I don't know, maybe 100 plus, even more than that usually. Or you're trading Asia with 30 cars back and forth. Like, you're occasionally going to get trapped. But just realize that, like, I think it's helpful to have like a vision in your mind of like, where was I 2 years ago? What was, what was my expectancy? What was my regular everyday? Was I even a winning trader? And then where could I be if I keep this trajectory? Where could I be in 2 years? And the idea that like 2 years ago, like I was a boom bust trader 2 years ago, where like I would have amazing days where everything would work, and then I'd give it all back and more, like in a day, because I did not have a clear system. So I didn't have a process for dealing with what happens when you get off process, because I didn't have a system to begin with. So it was just a matter of time before I gave everything back. And I knew subconsciously that was the result. But in my mind, I'd also had so many experiences where I was doing really well. So it was very easy to convince myself that, hey, I know what you're doing. You're not going to blow up. You know what you're doing. You know how to read markets. It doesn't matter if you don't have a system for dealing with your drawdowns. You will. You will blow it up. It's just a matter of how big you need to get before your emotions start to take control. So while I think it's possible to intuitively trade with a certain amount, eventually, once you get to an amount that you are not willing to lose, you're going to want a process, you're going to want a system so that you have some sense of what to expect. And I realized I don't want to wait until I lose 300K from that I made trading intuitively. I don't want to give that away on some, sense that it looks like it's bullish. If I'm going to trade big size ever, I want to do it with a system, right? That's what brought me to Simon personally. So anyway, that's the close. I think I had a pretty good exit at 12 to 35.50. Or that was my target. My exit was on this bar, this one. So it was more like it was in here. But that was a pretty good exit, I'd say. I'm happy with that. Let's quick review the day. I want to specifically look for a couple of new setups that I've been watching. And I also want to point out where I made some mistakes, because I can learn from that. So here we go. Let's go back to the start. I'll try not to dig too deep into everything. But sorry for the rant. It's just been on my mind lately with sizing up and making good decisions. It's a really important thing to understand the difference between sizing up with a system and sizing up without one. Okay, so we had Powell talking at 9 o'clock Central. So, and then we had the open at 8:30. So between 8:30 and 9, the chances that you get a great trade are not very good, but we can go over it anyway. So we started pre-market with somewhere we dropped, right? No, that's right. We went up pre-market and opened up at the top, up near the top. So this brown here is overnight range. So overnight range, we approached the overnight high and we rejected it with 2 purple bars in a row. Okay, I've talked about this before, but sorry, I'm getting over a cold. This has been a lot of talking. 2 purple bars or 2 pink bars in a row at the beginning of a rotation. So when they have these little flags, or they're just, after a turn like this, 2 in a row, it means that buyers pulled their orders here and nobody came to save them. I'm also finding when you have 2 purple bars in a row and you don't have a yellow dot on the first one, the chances that reverses and goes higher is super low. If the market can hold this area, it can be a sellable retrace as well. So see how they put 2 purple bars in here with no yellow? So look, they didn't hold it, but then they reclaimed it. So once I see this second bar and there's no dot up here, I right away know, okay, I'm probably done buying. Whatever I was doing with the buys, this is my last chance basically to get in long. And if we give back this level, or if they're just not able to go higher, but if they ever give back this level here, it's bearish. Okay, so what you could do is you could draw a line right under that, and you could say this is my red line in the sand. And if it goes any lower than that, I know for sure it's sell only, right? But what's so great is a lot of times the market will do it twice, meaning now I can actually have an earlier notification up here near yesterday's volume area low that if we give that up, it's going lower and any short can be taken. So it's not the double purple for me is not a trade entry. Simon in the room does use it. It's a great spot to buy 0 day till expiration puts or calls. Like 2 pink bars at the beginning of a rotation would be a great place for calls. And then this is the kind of spot, even if you got it here, if you got puts here, like as soon as they drop below the purple bars, and then like you just have to be able to hold for like a bit of a retracement because it's not always the very bottom, but for sure if they drop it and then they can't retake it, like this area is going to be resistance. So the only other trade I have here that I wouldn't have known really about until after, so you have pink bar followed by a star, but that usually needs a location. We did have the overnight high was put in earlier, right? Yeah, right here. So pink bar star at resistance is usually good. If there's a blue dot on the pink bar, this is hella good. And then the opposite of that is purple bar followed by star, but it has to be at location. And there's got to be room to move. Here there is, so it probably would have worked. Other than that, I don't have anything until underneath this. So that basically this short is pretty aggressive, except you do have a location. But after you got the second purple bar and you got under it, now basically any aggressive seller is good. You can follow them in. So you could even take this, like the yellow is the aggressive volume. So once you've seen that yellow, you know that level is good to go. So you can sell that level as long as there's a seller there. So if we come up here and we get a bearish bar, it's a sell right there. So yellow dot, seller. He got another yellow dot. So that's now resistance. Even better. So that's an entry. Short. So you did have that scalp there. Okay. Early in the morning. That's right at the open. I did not take that trade. It's right at the open. Now, to be bullish, it's a purple. See, normally with a plus bar, if you get above the plus bar on a bullish bar that's not pink like this, that's usually a sign that buyers are actually trying to trap the sellers. And if this area holds for support, you can usually get a lift. But when it's purple, it doesn't always work, which is interesting. It's something I just found the last couple days. So let me just see, I wonder if I can wait until they take it out. And then if they reclaim this area, is it bullish? Let me see. Oh, they don't reclaim it. Or do they? They don't. Okay, cool. So yeah, I think I'm just going to avoid when the pluses are on a purple or pink bar because it's too vulnerable to getting swept. And so buying this is not very smart. It's also right into resistance, obviously. When I saw that fail today, I didn't trade it because it was so early. But I was like, you know what? I should avoid those purple pluses, and I didn't listen to myself later. So here's the next setup. We have plus bar. So if we can get a bar that's not purple, that's bearish underneath it, it's a short. Nope, they held it. So it looks like it's probably going higher. This X, did we get a close below that was bearish? Nope. So that area between the white is your pivot. Basically, whichever way they want to go, they'll push out of that area. Now, the problem is we have this resistance here. So buying here is a little bit dangerous. But if they would have pushed lower, I would have been looking for a short. But I think they pushed higher, if I remember correctly. Yeah, see, they get stuck in the resistance. Remember from back here? The purple bar resistance, it's strong. It can act for resistance later. So we get pink bar, star down, that's your short. Yeah. That would have been good. I did not take it. It was right at 9 o'clock. And I wasn't. They did it yesterday, right when his what's it called? The planned statement was released. They just dumped the market yesterday, and he was speaking in front of Senate today rather than Congress. And I was just like, they're probably going to do it again, but I wasn't confident enough. I would have felt so stupid trading right in front of it, but it did signal. So
I guess I could have taken it, but it's, yeah, I don't usually trade those kind of events anyway. So this pivot is done. So now for bulls to be in control, they have to beat this X. They got to get up here, or else we got to trap somebody. So it's bearish only now. But like I said, there's not really a trade other than this, and that one was right at the release. Okay, so now see how they're putting yellow dots lower? They've had 1, 2, 3 yellow dots. Usually they need rest by now, but they don't have to. But usually they do. So let's just see if that can work out. Now this star, they'd have to get above this. Yeah, this is a pretty. That's a pretty. That resistance is pretty far away. They're going to need to trap some shorts to go any higher. Okay, I don't. So we have 2 purple bars, right? So, but they're not at the beginning of a rotation, and it's way deep. So these might get beat, and then that could become support. Let's see. We get a ring. The rings can also become support if you get above them. Okay, cool. So purple bars, ring. So this whole area, assuming we close 1 more bar bullish, that should be support. Let me see if we get it. It's pink. I don't love that. I want a bar that's not pink to close bullish. Wow, so many pink bars. So they trapped an X. See how they got above that? But I would not have gotten signaled because I did not get a blue dot, and it was on a pink bar, which I don't love. And then it was pink, 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 pink. So sellers are all quitting, but no buyers are really coming in. So I don't know if perhaps a pullback still works here, but I'm suspicious. Pink bar star is usually short if it's bearish. But again, these purple bars are potentially going to get trapped. So I just wait and see who owns this area. Yeah. Okay, so is this above the purple bar? I don't think it is. The VPOC is right at the purple bar. I don't know how to interpret that either. If it's above it, it's bullish. It's right on it. It is above this one. So that one's probably okay to buy. Yep. Blue dot above the X. That should be good. That's right. Now, purple, we've gotten clearly above purple, and I took this trade as a momentum entry and didn't get much out of it. It hung out here. My stop was down here, and I got nervous about it. I knew if we gave this up that it would be bearish. So now I can basically move my stop behind this. And as soon as it became good, I got like 10 points. I just got out of there. I just freaked out about it because Powell was speaking, and I was just like, should I be trading or not? And so I could have held, and that was the first step in the process of me getting frustrated. Was I got out of this trade way too early because it set up perfectly, and I didn't stay in it. So then the next trade I took was a pullback, and it failed. I didn't take this, did I? I shouldn't have. I don't think it was that one. There was a pullback long that I took. I think it was this. So we had pink bar, purple bar, and then green bar. I should have waited for the triangle. I should have waited for 1 more bar. I took it early. I took it here, thinking we were just going to continue, and it stopped. And I was like, well, that wasn't on process. I shouldn't have done that. Then they set it up again, but with no triangle again. So that, again, it's gonna go lower. Now, there's nobody trapped short here. So they can just keep grinding down. There's really nothing to do. Unless you want to short the orange bar with the dot, which isn't a bad idea. But I wasn't going to do it. It's not right into support. Because look, this is the earlier support. Right? So I don't really have a target to short, and I can't long because I haven't trapped anybody. So we get a star up. That's a good sign for buyers. Pink bar. Oh, it just squeezes? Yeah, that sucks. So no setup. Okay, if this gets beat, it can be shorted. And what I realized at the end of the day was because of that, it may be okay to buy this pullback. Let me see if that works. It does. Yeah, I think, again, it's not going to work 50% of the time, but if it's the first or maybe the second dot and you get a pullback into that location, into that range, I think it's actually okay to buy it. Yeah, as long as it's breaking out. It's got to have momentum for that to work. Like this one ends up failing, I bet. Yep, that one would have failed. So again, it's not even 50% accurate, but if you think you know the direction, I think those dots producing a pullback that gets bought, that's usually enough. Because I know if they trade below it that it's over. So see, here they got a purple bar below it, below the dot. And then, So this becomes a pivot. And this is most likely what's going to kill it. But it's pink bar star, which is only good if it's bearish, and it's not bearish. I would want one more bar underneath to be sure. Oh, they don't get it. So it just pivots around here. I don't think I could probably do the exact same thing there. It's yet another dot on a pink bar. I know if they break it, it's bearish. I could have bought that. Darn. The way I thought about it is I have an X, and so if I get over the X, it's bullish, but I waited for the non-pink candle. So I bought the breakout way up here. And did I think I got 10 points? Yeah. And that one worked. I was like, I thought I got 10 points on that. So now your stop is here. Can't take out that X. If I remember right, I took a stop up here somewhere. So eventually I trailed out. And then where was the stop? Where was it? Wasn't that? Must have been the next time they tried to lift. That got the triangle. That was it here? That's on process if you think it's bullish. Nope, that one worked. Wasn't that? This one worked too. It's funny, I'll have to look back. So here's another one of those ones I could have traded, but I didn't. Pink bar with a dot doesn't get beat. That pullback can probably be bought. Let me see. Yeah. See, even just taking a couple of those might have padded my day a little bit. I think all of these pivots are probably finished. We've traded through them a couple times. I missed all of that. That's too bad. Okay. There was a stop. I took a couple stops in a row up here. Did I miss a short? I didn't. That just rolled over. It ran into overnight high and rolled over. Bastards. I remember this now. So this was an entry I missed and I got really upset. So this was a supernova. I remember this. This went supernova, meaning it closed above an apex to the upside. What I should have been doing there is waiting for a pullback. And when they pulled back underneath this and trapped back into it, I should have bought. Like the whole room bought this trap. And I didn't have a dot, and so I skipped it. And it went for like, I don't remember how many, 80 points or something. I was so pissed. And again, I could have probably bought this after the dot, but that frustrated me, and this is where I started taking stops. Did I take stops right at? Where did I take this? I think I might have bought this, which is awful. I think I did buy that. That looks so horrible in retrospect. I think I was thinking we cleared the POC, and I just got to get long, but that's awful. That's gross. Super embarrassing, but I'm pretty sure I bought that. And then that was it this one? There was one of them that actually set up pretty good and just straight up stopped. And I was like, wow, that was dumb. Yeah, it was this one. So I know I took that. I took 3 stops in a row. I know that. So that would have been number 2. And then there was one more, and that's where I was like, fuck, I need to stop. Like, I stepped away, and then I came back and made most of it back. So my next, I don't know why I didn't go short here. This should have been a short, but I didn't take it. This. Okay. This was the long, if I remember right. If I break over this, it's a long. Yeah, that. So I think I took that. And that worked. Okay, good. I thought I took 3 stops in a row. Was it here? If this breaks out, it's bullet. I took it early. So I believe I took this one. And I needed to wait until this was broken. That was a mistake. That's technically 2 purple bars range in a row. This is now resistance. I should not be getting long. Yeah. This is bearish. And this one too. I think I might have taken that. And that sucks. The way I was seeing it is it's a star and it got trapped, but these are pink bars and we have purple bars above us. That's bearish. Oh, that's tough. That's really tough. And then to be bullish now, you have to break above this to be bullish. And I think there was another, yeah. So I believe, if I remember correctly, I bought this and I didn't wait. I should have, because I think it gave us 1 bar and then dipped. Yep. So there was so I took all the stops right there. That sucks. I was just working way too hard trying to get this to bounce, and I missed the fact that it was bearish from way back up here because we have these 2 purple bars acting as resistance, and I missed it. Instead, I bought into it, 3 times. 1, 2, 3. And I was like, fuck, I need to stop. Right? So that was the 3 stops in a row. I had already taken at least 2 stops earlier, but I had like stop, win, stop, win. So I wasn't down a lot. Now with 3 stops in a row, I was down bad, right? And I was like, okay, I need to switch things up. I need to get better. And I did. Okay, hold on. I did, but most of it was from just a couple trades. I started looking for only really high quality trades because I was doubting whether or not I was right or not. And there was a point down here where I realized I could buy calls. That was at like, I don't remember what time that was. What time? Let me look at the chart. Let me see if I can figure that out. Where was the call purchase? 12. It was in here somewhere. It was in here somewhere. And so yeah, I think when I walked away, they broke out. Yes, I remember now. So I walked away because I took 3 stops in a row. They broke out. I was pissed, right? I bought calls, which ended up paying. But I was like, I can't trade futures. I'm feeling tilty. So I walked away and missed this. Bought calls on the pullback, like somewhere in here. And then it set up again. So I think I bought calls there. And then it pulled back and it set up again. And I'm like, you know what? This is a really good setup. I'm going to go ahead and take it. And it worked. And then I was able to get back into the groove. So we had a plus. And if I remember right, they printed a down bar or a big wick. And I knew if they got under this that it was bearish. And so I bought, I think it was this pullback. Let me see. Thought it was a plus bar. Yeah, I think it might have been that. Yeah, it had to be. So it must have been this. Then we got green with the ring, followed by plus. And I'm like, okay, if they take this out, it's bearish. We have support underneath us. We are above, look, the 2 purple bars. That's the resistance. Right there. That caused all the stops because I didn't catch that. They got stuck here, right? And we pulled back. And so by getting long here, I've got expectancy to take profits there. And then if I get runners, great, right? Was my thinking. So I'm like, as long as I can get long in this range, I'm good. It gave me a wick. I got long, took a third here at the dot, whereas I probably should have just added on this. I probably should have added. I just didn't realize that till the end of the day. That second dot, it's not usually done. They can print 2 dots and then pull back. It's usually buyable. The third one maybe not, but the second one should be if it's a breakout like that. Third one does. Fourth one, a little tight. But that's I think the second one is probably safe. We get above this key level, back to the I think that was high a day at the time, if I remember correctly, or at least close to it. And then I still had runners on it till here. And that's yeah. So it was basically, I was down until that trade, right? And then by the end of the day, I wish I could say I went green, but I got very close to being green. And I know it doesn't look good, but it was down 1,800. And because I recentered, found the good setup, stayed focused, held to my target, I got the most out of that trade I could have. Plus, I had bought calls, and I got paid like $80 per contract on the calls too. So it's all's good that ends well, right? Or however that goes. All's well that ends well. But I did not trade as well as I could have. There were clearly a few shorts that I missed, and a couple spots where I should have known. The spots I took 3 stops. The only thing I'm really irritated about, I'm okay with missing trades. The thing, oh, hello. The Air Force Base is right here. They always fly their spider jets. Sometimes they come right over the house like that. I can literally see, I could see them out of the window. It's like, whoa, you're really close. They're not usually that close. The one thing I'm really irritated about is that I took those, like I said, taking 3 stops in a row, it happens, but it shouldn't happen when I have a location that I could have protected myself from. So had I seen these purple bars in a row like this, had I recognized that that would have been resistance, I would have flipped to bearish at that point rather than trying to buy here. And taking these 3 in a row like that, like I said, in my mind, it was an opportunity to get this trade that I missed, right? Because I had missed, where was that? This one. This one. This is the one I missed, and it basically came right back to that level, right? And so in my mind, I was like, this is my opportunity to get long where I missed it before. And that's not the right way to think about this at all. Like that trade is done. When you miss it and it goes to your target, that trade is over. Things have changed since then. And the thing that changed the most was there were these new sellers and the lack of buyers here. And we're trading under that high, right? We need to get over that to get a breakout. So the only place I should be getting long is after we trap a short, and particularly low enough that I can take my profits here, because that's resistance and it might not break out. So like I said, these aren't any good. There's not enough expectancy. But once they get this, I think it's this one that gets trapped. Yeah. They trap this X, and these X's are really vulnerable, super vulnerable to get squeezed. So if we get over this guy and release the trapped star, because he was followed by an X, so star followed by X, and then reclaim. If they reclaim it right there, it's gone. It's done. See that? Like, I'm not saying it happens every time, but like a lot. Here, let's see if I can find one on a smaller time frame, because they'll print more, and then I should get going. So star followed by X, reclaim the star, it's gone. See that? It's not going to go to high a day every time, but hopefully that makes sense. It's star in one direction, X in the direction that we're going. So like a bearish X at the low. This one had a star also. So this guy got just mad trapped, right? And you can see when they came back to test him, he was not a seller anymore. He was a buyer. He was still a buyer here, and they're done. But the key there is that we had to release this buyer so this star is an aggressive buyer who tried to buy the low. He had the right idea. He was just early. And this guy came in and effed him, right? But when someone else came in with 2 pink bars, which again is often the low, he was like, you know what? I'm going to get long again. So he buys again aggressively on that blue dot, probably, and it's gone. Because now his trade is working. So he took a stop, but he got back in. It might not be the same guy, but it's the same aggression level. So like this is where he got in. He got stopped probably, or at least offsides, and then maybe added, or people followed him in, and it was over. Let's see if we can find another one. So it'd be a blue X at the top, followed by following a yellow star, or just like that at the bottom with a white star that gets taken out by a yellow X. It works better when it's both. See, when it's just one, so if it's just the X at the low, but this doesn't have a star, they don't care that you release this guy, right? The buyers aren't really thrilled. They're still in sell mode, because there was no aggressive buyer here in the first place. So this one you don't really care that they beat this X, because there was no one trapped to begin with. Okay, let's see. Here, this one might work. X. We had an aggressive seller. This isn't a star, but it's a ring. It's the same concept. And a high volume diamond. So once he gets reclaimed, it's over. And that, you could make lots of money just on that setup. Let's see. Okay, so here, again, the X at the quote-unquote low is following just a regular old bar. So getting above them won't do anything. They end up losing it, right? This one, they get under it, and he falls hard because this one had an X on it. So when there's a symbol on the one before it, in this case, and you trap the X that's poorly positioned. This one, poorly positioned X. This one was just the diamond, but it's still an algo signal. It's a red diamond too, which makes it a little better. Get underneath them. They try one more time, and then they rip them down. X's. It's easy to do this in retrospect. It's harder to do it in real time. So here we got, so look, this one, right, is at the high. So like we don't, like it's not, you'd have to get under this. You have star, X, get under this, and it should be bearish, which happens here. But then they get trapped. Star, on the small time frame, you're going to see this back and forth over and over again. On the big time frame, this doesn't happen very often in such a small space. This is the release. So star gets trapped by X, X gets trapped by pink, and star gets released higher. Right? And realize, I realize it doesn't look like a lot, but understand. Let's say you didn't even get in on the breakout and you instead said, I'm not sure if that's going to work, but if it pulls back to that level, I'll go ahead and try it. All right? And like, so maybe you miss 30% of them, but you get in at like 95, and this goes to, or let's say like, let's make let's say you waited for it to break out and you got in at 202, right? Like you were as conservative as possible, and it goes to 22. That's 20 NQ points at $20 per contract, right? So every single contract, $20 for every point, and you're going 20 points. That's a pretty good, that's what I make in my regular job for the whole day. Like $400, like that's a good day for a lot of people, right? Like I like my job, but like, and I don't have any chance of losing $400 in the day. But like, if you can do that even just once a day, and look, I mean, it's set up a ton, and that's on a tiny time frame, right? On the bigger time frame, it's going to be bigger than that. Here's another one. Star, X, release the star, and it'll go lower. Release the star, rotation down. It's relatively abrupt. And if they hold this, it'll give you another one. I wonder if they give it back. Does it count? I don't know. Does it act as support later? Oh, doesn't reach it. And doesn't quite reach it. Oh. Nah, it doesn't really act as support. This guy just gets trapped and then released, and then that's it. Yeah. So I mean, it happens to be in the same spot, but it's not the same thing. And even on the higher time frame, this actually works in the higher time frame, which I've used to buy for calls. So let me see if I can find on the 80 tick. I'll show you just how big these can be. It's got to be star followed by X, and they have to be the X has to be out of position. So the X, if it's a bearish X, it's got to be at the low, and if it's a bullish X, it's got to be near the high. Otherwise, it'll still work. It just won't give you a big move. You'll just go to resistance or support, and that might be nearby. So no out of position X's. Remember, it's a big time frame, so it may not show up very often. Okay, I'll show you this, and then I gotta go. I got some other stuff to do today. All right, this should work. So star up. No, wait, it needs to star down. It needs to star down to get trapped and released. So that doesn't count. That doesn't count. This would have to be a star. That's not quite it. It still kind of worked, but it's not quite the same. Okay. Like I said, they don't show up super often. That X is well positioned, so you can just trade it as an entry signal. See, when they're put in the right spot, like look, when they're in position and you trap the star with the X, that's still a great scalp. But it's not necessarily the low. In this case, it was, but what you really want is the bearish X to get trapped at the low and the bullish one behind it to be an aggressive buyer. Because then see this, the next aggressive, so here's the X that got trapped. Here's the X here that gets trapped, but there's no aggressive buyer behind him. So they give it up, right? Well, once you get an aggressive buyer, like a star, and you can't get under him, that becomes support now. And that's why this, that's why this is a good place to buy, because you already trapped an X at the low, and now you've released this guy. So there, he's free, right? You've got a bullish aggressive trader who's not offsides, and a bearish trader that is offsides, and so that's usually going to create a squeeze. That's in the right place. See that? I don't know if it counts with just the aggressive dot. I don't know if that's enough. But it would be under that breakdown. Doesn't look very convincing without a... It's got to be the right signals, it looks like. Okay, see, this one didn't get one. That's too bad, because that actually looked like it worked. On the higher time frame, it's a lot harder to get a star than it is on the smaller ones. You're not going to see. So, okay, here we go. Bearish star, bullish X, beat that, should break down. It's usually going to be a purple bar or a pink bar doing it, because it's usually fast. And then that's resistance. That's your other entry, is here. The aggressive traders, they're shorting. Now, keep in mind, on this time frame, if this sets up, right, you could buy puts here or here at like 12,670, right? I wouldn't buy futures, because you don't know you're wrong for sure until they break this, right? Like, they can wiggle around here. Like, look at how big this range is. This is 40 to 90. That's a 40-point range that these bars are printing in. So using an 80 tick, you might get an idea of direction, but it's probably not enough to trade with heavy leverage. But you could definitely buy some puts, or I could anyway, on like one of these stars, and then just, if it gets above this, just get rid of them. And then, like, if you got in at the latest ones, 12,624, your MAE just on the day is like 270. That's 400 points? Is that, no, 300 something, right? 300 some points. So, I mean, we're talking over 4K. If it's futures. I guess if it's options, it's probably not going to be 4K. It depends how many contracts you take. It won't be 4K, because otherwise, if you could take that many contracts, you could just do it with futures. So, but for me, it's a good trade. 400, 300 plus points, that's a hell of a trade. Even with options, right? And like I said, that's still just one setup. Does it show up every day? Not every day, but it shows up. Maybe not so often on the 80 tick. It shows up every day, every hour on the little one. It shows up all over the place on here. Like, all the time. And it's relatively easy to find. Star, X, break over. If it's the low, it's good to go. It's got to be poorly positioned, though. I have to think that this is support. Otherwise, like, you really shouldn't be buying reversals. It's a reversal. It's a reversal setup. Like this one, if there's so once they get a star, yeah, here it doesn't really. I guess maybe all you need is volume, because here you have high volume getting released. Maybe that's enough. I will look into that. Let me see. What does this bar have to be? I know it works with stars, but I hadn't noticed that it actually seems to work with diamonds too. And that all that is just relatively high volume. That's not a complicated setup. Huh. Okay. Well, I will keep looking into this. I'll leave this video up. I know we didn't really. I don't think we found any trades. I was already in a trade when we started, but I did give a pretty good rant on why systematic trading is useful and how to manage risk. So I'll leave it up there. Sorry we didn't get many trades in the last hour, but at least we were able to kind of back test a little bit, and I can show you some of the setups that are definitely worth looking for, or at least learning so you can recognize it. And if you want to know more about the algo or how to get in the room so you can see it, you can contact my coach, Simon, trade_word_perform@gmail.com. I'm on Twitter at RedBandTrader. I post stuff all the time on there, including like setups and stuff. So if you don't follow me, you probably should. And would love it if you would subscribe to my YouTube, because I do these pretty often, and I give away a lot of stuff. So you might not have the algo, but it's you should still see how the setups are built. And if you can read a footprint, you can probably figure stuff out on your own. It's just, like I said, it might be hard to actually execute it in the future, but once you understand some of these trades, you realize that it might look complicated, but we're all doing the same thing. I'll be honest. Like I've known a lot of different systems, and they're all a little different, but at the same time, they're all also pretty much the same thing. So the key to make something work is consistently is to have consistency with what you decide is good enough to get in. So once you know your criteria, and that way you can back test and forward test that idea and see if you actually have an edge, all of a sudden your confidence is going to explode, because now you know that as long as you only take that trade, you're good. So yeah, that's enough from